Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Hey, and everything's going good. And guess what? I mean, it's almost midnight here on the West Coast, but we are getting this thing done earlier than Sunday night, so that's good.
Burning the midnight oil, literally.
we wanted to give it to people earlier, and hopefully they can benefit from that. So, all right, let's get started here. It's Saturday, July 15th, and you brought up a good point earlier, and I put this into the slide thing, and you were saying that people probably don't know how to curate seasonality properly. So I just wanted to take a few minutes and go over this. So I've highlighted what the screener should look like. So if you wanted to do the third Friday, which is typically expiration, and you wanted it for the same month, so it'd be like July is what you're thinking, is because it's upcoming at the end of this coming week here. On Friday is expiration Friday. It's not a quarterly, but it is a monthly expiration, but we want to just focus on that as an event. And so you can choose, stocks, you can choose your market, you can choose your watch list. It can be S&P 1500, 500, 100 could be the Russell, whatever you like. You'd have to go back in the date to the year before, because you can't go forward because we haven't arrived there yet. So the data is from the previous year going back. So we go to July 15th. When you're choosing the date, you'll see the third Friday, because the first Friday of the month was actually the first day of the month. So the first day and the first Friday were the same. And so the third Friday was the 15th. Kind of came early last year. And, you can see by these numbers, the 7-month, the 5th day of the week, which is the Friday, and the 28th week of the year. So you can kind of see that you're into the right, and it was the 10th business day back then. So you kind of had a expiration sort of mid-month seasonality compounded as you did the first trading day, and the first Friday was compounded. So there was a lot of compression last year, and we were right in the middle of a summer rally too. So it was interesting. You look back period, 2000 days, and you want like minimum 4 events. That means that something's been around for at least 4 years. So we do have the option to choose all months. So you can always choose the third Friday for all months or the same month. If you want only to focus on July, it would be the same month. So I put some notes here. You have to go back in time. Now the dashboard does it for you, but it doesn't have all the symbols or feature you might want. Additionally, you cannot export a CVS file from the dashboard. So that the dashboards are great because it's doing all this behind the scenes and bringing it to the forefront. So it makes it easy, but you can't export it. Okay, so probably a good idea is to check the symbols that you curate here with the dashboard. So our dashboard is kind of forward looking. You go to it and you can see what's upcoming for this Friday. So you curate here with this approach by going backwards, and then you'll see your symbols, and then you can go to the dashboard and compare the seasonality. It's the seasonality almanac vault is what we call the dashboard, and they should agree. You can export, then sort, take your top long ideas and your top short ideas, choose another signal. So from the drop down, you can choose another signal. Now remember, when you're doing this, to go forward now to July 14th Friday of 2023 for other signals. So don't make the mistake of leaving it on last year when you're going to other signals. This approach is specifically for when you're curating seasonality. Okay, and then you can take those symbols and again change your date, whatever, and then drop them in the symbols thing, save, and then run various signals and see if there's matches between the seasonality symbols that you came up with and any other signals that exist. So I hope that helps. Thanks, Dave, for the suggestion there. Appreciate it.
No problem.
Now, this is going to the web screener, the dashboard itself. So we were just on the web screener. Now we're in the dashboard with third Friday of July seasonality for ETFs. Okay, so you select the third Friday here. Month is July. It's doing all that stuff behind the scenes. It's bringing up that. One thing beyond just these, look at the symbol count. There's 104 ETFs. Now there would be more if we change the price or we change the volume or both. There would be a change in the symbol count. But probably the symbol count would give you still this same sort of skew. So 28% are positive versus 72% are negative of the 104. So that's saying that this third Friday of the month of July is not necessarily a super bullish occasion. So that's important to note. It seems to be a little bit of a pause in the month of July because the month of July has good performance, mid-month seasonality, which we're still going through. It started on Thursday, and you know what Thursday and Friday did. And we're still in it, and it comes to an end. So it's the 9th through 14th business day. So we had the 9th and 10th. We got the 11th on Monday, 12th on Tuesday, 13th on Wednesday, and the 14th on Thursday. So it ends before this seasonality, which is historically softer. So isn't that interesting?
Mm-hmm.
Dave, what do you see in terms of some ETFs that interest you here?
Yeah, so it's showing strength in gold, some basic materials, some financials, but a big weakness in oil, XOP, XLE, and also the chips, the SOXX. So, and the high beta stuff like healthcare, XBI and IBB. So
right.
Your biotech, oil, and chips a little bit weaker and more defensive like gold, right? And that makes sense because it is a weaker.
But here's the interesting thing, and I want to make sure that people understand to discount commodities to some degree because of the influences of the US dollar on commodities. So if we review back to last Sunday when we did our podcast, we said that we were looking for some premium before the seasonality window because seasonality was supposed to be softer for the gold and things like that, right? But it actually, because the US dollar was so weak last week, it rallied the basic materials, had phenomenal performance, which we're going to see here in a moment when we go to our review of last week. But this is now the opposite. So it's like gold is supposed to be strong when it's kind of already been strong. So what I want to do is take away the emphasis on the commodities, and I would focus, like you said, maybe on the chips and even SSO, which is the SPY 2x. It's a 2x bull of the SPY. So that might be something that we could look at. We got biotechs in there. We got retail, XRT. You got some healthcare. So that might be the place to focus. I mean, oil oil's had a bit of a run up to $80 a barrel and pulling back a little bit now. It might still give you some legs and be a good short on Friday. I don't know, but it does a little bit depend on what the dollar is doing.
I'm looking at some of the symbols for Friday, things like Intel, Tesla, Google, Apple.
So let's go to the next slide here. Oh, I got that. Look at that, Dave. So there you see it. So why don't you go through this?
Yeah. So these mega caps that have been rallying last week, they're expected to be pretty soft on the third Friday. So Apple and Google, which have done really well lately, Tesla, and then in terms of chips, we have Intel. That's in line with the ETFs, and for healthcare, we have like BMY, Lilly, Pfizer, Johnson & Johnson, Merck. So those aren't the IBB stocks, but they're still healthcare. And then longer things like Netflix, Bank of America, which has earnings this week as well. There's a lot of earnings this week, so whatever you pick from here, it could be influenced by earnings. But Visa, Citigroup, so some of the bank stuff is a little bit stronger on this coming Friday,
Right.
typically.
And what I mentioned up here, was you could see, sector plays or pairs, anything that matches like that. So interestingly enough, when you look here at AMD, it's supposed to be bullish, Intel bearish or clack. So I mean, or AMAT, there might be some good opportunity there. So watch for a setup on those, because seasonality, if the stars are aligning in terms of the bonds and the dollar and kind of the sentiment and things, and you get the seasonality calendar like this, and you see some pair setups, it can really be very generous. So use it. All right. Anything else from here?
No, that's it for the slide.
Okay. So then we have the streaks. I want to point out a couple things. So in our dashboards, we have more than just seasonality. There's a projected 3-day return. So this is from the close of Friday to the close 3 days later. And you can compare it with the other dashboards. We have Bollinger Bands and RS like that. But again, the sliders will, change how many symbols are in the count and things like that. And then some of these symbols would change, obviously, if you move the sliders around. 10 events, so there's enough samples here to say that could be somewhat statistically relevant, right, with that many samples. The more, sometimes the better. But then, of course, you miss a few opportunities, especially in the streak land, where you might have had an event that's only happened, a few times. So if this is set at 10, that means that JP Morgan has had at least 10 occurrences of streaking 6 days in a row up, right? So these are bullish streaks. These are bearish streaks, meaning they've gone down. CCL down 4 days in a row prior to this 3-day return. That's happened 10 times. Dave texted me, earthquake in Alaska just now, 7.3. That's
pretty big.
Significant. It's significant. I mean, that's the same as what you get in California with the pretty big ones. I mean, what was the Northridge? Was that 7.9 when you had Northridge 1994?
I don't think it was low sevens.
Oh, it was low sevens, but it did a lot of damage. The Northridge one, I remember that. Wow,
This is pretty big, 7.3.
7.3 is big. Yeah, I'll take a closer look there when we're done. Interesting. So I like this area of bullish reversals and bearish reversals. And if you're in a fairly robust market, I give more credence to the bullish reversals and more caution to the bearish. And then in trending markets, these can be pretty good. Like there's AMD showing up here, and it's also was noted on the seasonality for Friday, but it's up 3 days now. Trade Desk's up 6. Tesla's up 4. So there can be some great opportunities, but if we just had some bank earnings, and JP Morgan was one of them, and it was up 6 days in a row. So watch for pullback in some of these extended areas. And again, this isn't like it's just happened one time. This has at least happened 10 times. If you mouse over that on the actual dashboard, you will see how many events there are. So this says 73.7 odds of being down after this event historically, down as much as minus 1.8% in the 3 days, close to close of Friday to the close 3 days later. And be interesting to mouse over that on the actual dashboard and see how many events. Okay. So let's a little bit of review here. On Friday, we had 1 day healthcare rally. It was softer day before. I know that for a fact, and it moved up 1.11%. Energy had a big bad day, down 2.57. And and it lagged for the whole week, or this set it back for the week. And basic materials came in plus 4.36%. And that's largely because of the dollar, which we'll look at in a moment. So just remember that basic materials has a lot of metals in it. Besides, that sector has other things in there, like even paper and packaging. But the point is the metals are the main driver related to the dollar. So let's move on to this. Again, this is including more symbols, and this is just the sector spiders that relate to the S&P 500. So there you'll see a little bit of performance difference where, oh, sorry, I captured the wrong one. I was going to do performance and I got the technical one where it has the ATR beta and all that. So you'll have to look at it yourself. But while we're here, you'll notice that your betas are quite different. Look at your lower betas on these defensive areas. So that's part of figuring out, what is more defensive, what is less defensive. Look at the beta on XLY, 1.2, more than the S&P, obviously. So this is more risk on. And XLE is more volatile, right? 1.38. XLK, 1.13 over 1. And your XLU, your utilities, your healthcare, and your consumer staples all have lower betas and also ATRs. So ATR is a measuring stick of volatility for that particular product. So it is a unique formula. Beta is relative to the S&P. So I'm glad this accident happened because it helps to reinforce how you can come to grips with, understanding a little bit more of their nature and why they end up in our risk on list or risk off list. And maybe it helps you choose a little bit, right? So moving on, this is the SPY for the 15-minute chart going all the way back to the 5th. So we had that dive on the 6th, which a nice reversal, rallied back. On the 7th, we continued that rally. That was the Friday. But then we pulled all the way back to the pre-market lows. Like the last 2 hours of the day, we just hanged. So that was disappointing, some of the bulls there. Traded sideways on Monday. Lifted up a bit on Tuesday, and look what happened here. We had our late day rally. Somebody knew something about the numbers, right? Somebody knew something, and we popped up. It had a big gap. And this is a little bit different of a week than the week previous, where we filled the gap multiple times in both directions. And that was because of light volume in a 3.5-day week, broken up by the July 4th and a half-day Monday. So this is a full week now, and the gaps aren't going to be filled as quickly when you got some momentum behind you. Gapped up again, rallied up into Friday, and pulled back a little bit on Friday. So that's how the week went. So quite a elevated week overall. And this is the SPY versus RSP. RSP is the equal weight, so it has more exposure to the mid caps. I just want to point out that when the NASDAQ 100 announced they were going to do some changes, which really affect the mega caps pulled back, and you had more of a broad market move. So it looked like the markets were kind of weak because the bigger caps, mega caps, were pulling back a little bit. But it was actually a very broad market rally. So this was the ratio of the two, but the market, performed a little bit better than that. And then the last 3 days with the PPI or CPI, PPI, and jobs numbers and stuff, we actually rallied back, and some of those mega caps bounced pretty good. So this is a great relationship to gauge whether the FANGs are in charge or whether you have more of a broad market move. Okay, so if the FANGs are selling off, probably the SPY is going down in relationship to RSP, and if the FANGs are rallying, probably see this. Okay. Dave, you want to go through the economic calendar here?
Yeah, there's a couple themes for the week: housing and retail sales. Monday, we have Empire State Manufacturing Survey. But Tuesday, we have U.S. retail sales and Home Builder Confidence Index, which are some to watch. Wednesday, housing starts. And Thursday, existing home sales. So a lot of housing data um, and some retail data as well. But the bigger story is earnings. We have a lot of earnings this week. Too many to list here, but some of the key ones are Bank of America on Tuesday, Morgan Stanley. So a lot of financials. Wednesday we have Netflix and Tesla. Those are two big ones, and just a lot on Thursday, Friday, and Friday is American Express. So whatever you are trading, cross-check to see when the earnings are, because there's a good chance a couple of your symbols will be part of the earnings this week.
Okay. I think we're done with that slide, so we'll move on to the futures. So one thing that's been happening is the VIX has been declining. We talked about that, Dave, did we not? And we actually started to mention it up in here at the end of May that we were going to be heading down on the VIX, which is historic. A lot of times the lowest VIX of the year can often occur in May, sometimes even in April, as we see here. And so we've continued to decline. So that fear is relatively low. And this can contribute to a bullish market. We're getting 13.75, so things are getting more efficient. You'll find that traders that rely on volatility for their gains, especially for scalping and stuff like that, are going to have a much bigger struggle. It takes more capital, so it becomes more capital intensive to make money. Now, with open to close, you'll probably have persistence of trend, or maybe a gradual change or reversal. We'll probably start to see less of the V-type reversals that you saw during the light volume week of the July 4th holiday week there. You'll probably see more smoother transitions with lower volatility. And if you feel like you want to fade something or add to a losing position, I would recommend not doing it unless it already turns for you and you get confirmation, because it'll be a situation where you'll just get run over because it'll continue to trend. So this VIX is really important to pay attention to. It's one of our top leading indicators in terms of the nature of the market. So a lower VIX supports the buy side because there's no fear in the market. Okay. Now that doesn't mean it can't change. Look at how abruptly it can change because of an event. Like if California has an earthquake and falls into the ocean, all of it, then of course we're going to lose Dave. But volatility would probably spike, so we'll all be making a lot of money. Dave won't be around, but it'll be good, right?
Gee, thanks.
So yeah. So I mean, I'm just telling you, it's like an event can happen, right? So that's important to note. Let's see. Let's just see how the S&P is doing here. Like I felt we wanted to really target this April, into sort of March 29th, 30th high, beginning of April kind of thing. I really thought we wanted to target it, and it looks like we're still heading that way. And then if we can get above that, then of course, the start of 2022. You remember that, Dave? Before the war started and all that. So I think the market wants to get back at least to this point, if not all the way back. So that would be remarkable recovery. But we are in, the third year before the election year. And so there is a case for that. There is a seasonality. There is a macro theme. Yale Hirsch has talked a lot about the presidential cycle, so something to read about. You could probably ask ChatGPT about seasonality related to the presidential cycle. I might be able to bring you some information on that. So NASDAQ's been stronger than the SPY, but now we've got these changes that are going to happen on July 24th with the change in weight. So that will probably change how the NASDAQ trades. May not be as juicy as it has been directionally. I'm not sure, but could be one outcome. Let's look at energy here. This was our rally that we had for the week that sold off on Friday. That's why you see that poor performance on Friday, down quite a bit, over 2%. It looks like we went bang into the 200-day moving average from the underside, and we bounced back off that. Isn't that interesting? Happened back here in April. So that could be why we had the sell-off on Friday there. Because the dollar, let's go to the dollar here. The dollar is popped up a little bit now. But look at that streak, Dave.
Yeah.
Right? I mean, again, we were talking about it potentially getting weaker. Why? Well, economic policies are such that, at the expense of the dollar is where we keep seeing it play out. So economic policies do not support a strong dollar, then you're going to have them use the dollar to their advantage, and that weakens it. Let's might as well go look at gold here, and then we can call it a night. So there's your rally on gold as the dollar had sold off, and now tonight, on Friday, we saw it pulling back just slightly, but that's interesting as well because we banged into the 50-day moving average on gold. So it'll have to pop up back through there, go challenge the 2000 level, and so it could be just a temporary pause. We went a long way in the dollar in a hurry, so could be just a bit of a pause here. And with that, I'll let you guys go do some more research on your own. But thanks for listening today here, and have yourself a good rest of the weekend, and catch you trading next week.
Good luck.